Last week, something happened in China that has never happened before. The biggest exchange traded fund in the whole country that ordinary Chinese people put their money into is now a gold ETF. So let me explain. Here in the US, we have something called the S&P 500. That's where most people invest their money, represented by ETFs like VOO. Well, China has an equivalent of that fund as well. That's this fund right here. This is China's S&P 500. And just recently, another ETF surpassed it. That ETF is this one, Huanyifu Gold ETF. It's now $13 billion versus $12 billion in stocks. So in the second biggest economy in the world, the biggest chunk of retail investor money is now sitting in gold. Now, what's interesting is that this is happening while gold prices are kind of crashing. Remember, gold peaked at around $5,600 an ounce earlier this year, and then it went down almost 30% below $4,000. And while that was happening, China was buying way more gold. And it's not just ordinary retail people from China. It's also the People's Bank of China. They just bought gold for the 20th month in a row, which is the longest streak going back to at least 2015. In June, they bought almost 15 tons of gold, which is also the biggest monthly buy since October 2023. China also imported roughly 700 tons of gold in just the first 5 months of this year, and over 14,000 tons combined since 2015. And it's not just the People's Bank of China, it's also the world's central banks that are buying gold as well. 41 tons net in May alone. There's also countries buying gold. Countries like Poland, Uzbekistan, Kazakhstan. Everyone's buying gold. And in a couple weeks, on July 24th, 4 of China's biggest banks are shutting down retail gold trading, which means if you're an ordinary Chinese citizen and you want to buy gold, China wants to make sure you're buying the real thing and not just the paper representation of gold. Now, again, if this were just China, this would be a huge story. But 2 weeks ago, the Treasury Secretary of the United States was in New York and he published a Wall Street Journal op-ed, and that paper basically outlined what the US is planning to do. And what it's planning to do is a return to an economic system named after Alexander Hamilton.
The treasurer has been to Fort Knox, and I am happy to say all gold is present and accounted for. The U.S. has the largest pile of gold in the world, over $1 trillion at current market value.
Scott Bessent's plan for the U.S. economy is what's referred to as Hamiltonian economics. And that paper explains every single chart I just showed you and all the things we'll talk about in this video, which is why China's buying, why central banks won't stop buying, and why some analysts calculate the math of the global economy only balances out when gold reaches $38,000 per ounce. That's kind of crazy to think about. So in this video, I want to explain what's going on, what this means for the price of gold in our portfolios in the future. So with that said, this is going to be a very interesting video. So let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the gold. So I want to give credit to Luke Gromen from FFTT. He put out a brilliant piece about this where he connected all these dots, including Scott Bessent's op-ed, where he talked about Hamiltonian economics, which is basically an outline for how a country becomes the richest and most powerful country in the world. It's how countries become superpowers. And every country that ever got rich did it this same way. And how they do it is they cheat, right? They use protective policies and taxes, and after they win, they preach to the rest of the world that other countries should trade freely and not manipulate their prices. They're like, hey guys, I'm done cheating. I won. You can't cheat anymore, okay? Here's how it actually works. We have to go back to December 5th, 1791. That's when Alexander Hamilton, America's first Treasury Secretary, the guy on the $10 bill, basically goes to Congress and he creates this plan, which is based on his report on manufactures. Now that report set the standard for how the US would operate for the next 150 years. Here's some background, by the way. At the time, the US was essentially a startup country. It had about 4 million people, most of which were farmers, and it had virtually no factories. Almost everything that was manufactured, like tools and weapons, that was imported from the British Empire, the same empire that the US just fought a war to get away from. So Hamilton creates this plan and he says, a nation that cannot make the things it needs is not actually an independent nation. It doesn't matter what your constitution says. If your economy depends on your adversary, then you're just a colony still with extra steps, right? So his solution was a 2-part plan. The first part of the plan was tariffs or taxes on foreign goods. The second part were subsidies for American industry. The idea was to protect young American companies, which he called infant industries, until they got big enough and efficient enough to compete with anyone in the world. This became the US operating system for about 150 years. And thanks to the US using this master plan throughout all the 1800s, the US was able to go from a country of farmers